Welcome back. I'm Michelle Makori, and we are continuing our conversation with Nic Carter, founding partner at Castle Island Ventures. Now, we're just about a week away from the Bitcoin halving event, which takes place roughly every 4 years, or once 210,000 blocks have been mined. Now, this event cuts the reward for mining a Bitcoin block in half, so effectively slowing down the creation of new Bitcoins. Now, this time around, the reward for mining a single block of Bitcoin will drop from 6.25 Bitcoins to 3.125 Bitcoins. Now, so far, around 19.6 million Bitcoins have been mined, leaving approximately 1.4 million left to be mined. And the final Bitcoin is expected to be mined around the year 2140. Now, historically, halving events have been bullish for Bitcoin, but what can we expect this time? So, Nic, what are your expectations for the upcoming halving?
Yeah, look, I have a different view from many Bitcoiners. Most people see the halving as a very bullish event because it represents a reduction in the issuance of new Bitcoin. I believe it will reduce the issuance rate annually of Bitcoin by 90 basis points. I would say that's a pretty marginal development. Previous halvings were much more significant. Of course, every time the issuance rate is cut in half. So each time we have a halving, it's less influential on the supply side. The other thing is, of course, everyone knows that the halving is occurring. Not to claim that markets are perfectly efficient or anything, but clearly there's a market expectation of the halving occurring. It doesn't represent an informational shock in any sense. So I would say the positive catalyst would be pretty muted. And my expectation is, frankly, a rally perhaps into the halving at best, and it being more of a sell the news style event, which is actually how the ETF went as well. The ETF was highly anticipated. There was a rally into the ETF, and then the week of, it was news selling. So I would expect something similar for the halving.
Okay, so you think once we do get the actual halving event that there is going to be a bit of a pullback in terms of price? How much of a pullback or a correction do you expect that?
I would say as a factor, the primary thing I would expect to see, ceteris paribus, would be news selling. Of course, there's other variables that could affect the price of Bitcoin at that time. But to the extent we isolate the halving itself, I think it's going to have a pretty minimal positive effect on Bitcoin, and most likely to be negative. Although I don't think
in the short term, though. In the short term, you see a negative impact on the price, just to be clear.
Yeah, I mean, I don't think it has a major long-term impact one way or the other. Actually, the only thing I would envision would be Bitcoin miners going out of business, because the halving, it doesn't necessarily have their revenues, but it certainly decreases them materially. And if we do see consolidation and insolvencies among Bitcoin miners, which I think is very possible, they may have to sell some of their Bitcoins that are held in their treasuries, which is similar to what we saw in 2022. A lot of Bitcoin miners went out of business, had to sell their coins. That also put pressure on the price.
So you see the halving overall as a negative for the Bitcoin price?
Yeah, and I don't think the excitement around the halving is that warranted, frankly. But yeah, at the end of the day, I don't think it's the most important factor that affects the price of Bitcoin. I'm much more interested in the demand side as opposed to the supply side. I think the ETF flows are far, far more important, much more material. Those are larger than the net effect from the halving. The macro conditions, aggregate liquidity, where rates are, what the 10-year is doing, those are the things that I think really, really matter for the price of Bitcoin.
But Nic, one could say, well, demand on the other side, of course, is supply. So if we're getting more demand from the ETFs and the supply is diminished, then, surely that means the price will go up.
Well, the supply is largely unchanged. We're just talking about a reduction in the issuance rate by 90 basis points per year. So look, if we were talking about the halving back in 2013 or 2012 perhaps, or the early halvings when you're talking about massive swings in the new issuance by miners, yeah, like it certainly mattered. Now each successive halving is only reducing issuance by a small amount. So I don't think it changes the supply dynamics that much.
So further break down the consequences for miners then, because you said it's going to drive many of them out of business, forcing some of them to sell their Bitcoin. Elaborate on that.
Yeah, I mean, I haven't evaluated the full picture of miners recently. Actually, the Bitcoin price going up has been a blessing for miners. And so they might be more financially secure now than they were. And certainly they healed their balance sheets over the last year or so and paid down a lot of their debt. And some of them were able to raise capital in public markets. But generally speaking, the halving does make life more difficult for the miners because, again, the same amount of hash rate is yielding fewer coins. And so they're just earning less in terms of Bitcoin. And of course, hash rate will decline as the halving occurs. And so, it's not that their revenue is going to be literally cut in half. It'd be more like they would be operating at 60 or 75% of their prior revenue levels. But there's just no world in which the halving is good for miners. So, yeah, I think they'll be challenged. And if miners do stockpile a lot of Bitcoin, we see this a lot. They tend to be pretty pro-cyclical. They tend to stockpile Bitcoin in the good times, and then when the bad times hit, they have to sell the Bitcoin. So they actually add volatility to the price, is what we've seen historically. If that's the same behavior this time, then I think they could also add to downside volatility here.
All right, so give me the timeline that you see happening here from the point of the halving and sort of the price projections that you have.
Yeah, I would say I would expect Bitcoin to be flat or down as basically the market realizes that the halving isn't the most bullish event in the world. And people realize that the halving didn't materialize anything particularly exciting. I could be wrong, of course, but that's what I expect. In the following 3 to 6 months, I would look at the miners and see how they're doing and see if they're teetering on the brink of insolvency. Potentially that could add more downside pressure to the price. But yeah, as I said, I think it's demand side factors that really are the most important for me.
Right, but going into 2024, you said we'll easily hit 80,000 for Bitcoin. I believe that was one of your calls. So are you seeing 80,000? Do you have, even with this pullback, or are you seeing, what's your price target now, I guess, for the end of 2024?
Yeah, I mean, look, on the first of the year, I think Bitcoin was trading in the 30,000 range, maybe 40,000. I forecasted 80,000 at some point this year. We were very close to hitting that just recently. 100,000 would certainly not be out of the question this year.
So even with all of this, even with the pullback, even with the miners maybe having to sell to stay in business, you still see $100,000 for Bitcoin this year.
Oh yeah, undeniably. I mean, as we look forward in the next 2-3 years, I'm very, very constructive on the price. I think the Bitcoin thesis has been validated. I think it really got that institutional nod of appeal from the SEC with the ETF approval. We're now seeing other jurisdictions approve ETFs. Hong Kong, I think, is a fast follow there. Bitcoin has really set itself apart from the rest of the crypto economy. There's other positive factors like the emergence of new layer 2 networks on Bitcoin, which are very exciting and allow for it to reach maybe technological parity with Ethereum. So if the Bitcoin network itself is sort of being upgraded in real time. And then the fundamental here is, there is a debt crisis on the horizon for the developed nations, in particular the US. And I think we will face monetary repression. We will face, yield curve control, high and variable inflation, and people will look for safe havens in other asset classes. Bitcoin has now been ratified as an asset class in its own right with efficient tools to access it for anybody that wants to in the US. And so that fundamental trend is unchanged, regardless of sort of short-term eddies relating to the halving.
All right. So, we were talking about the debt crisis and the role of stable coins and tokenized treasuries and perhaps alleviating some of that pain. But ultimately, you still see Bitcoin as an alternative to those that are very concerned about that. That doesn't negate the Bitcoin thesis as a store of value asset. I mean, is that correct?
Yeah, I mean, the Bitcoin thesis is pretty unchanged for me, even if it's not becoming a widely used medium of exchange, and I don't expect it ever will be, frankly, mainly for tax reasons. I mean, it's not efficient to use Bitcoin to purchase something because you have to track your capital gain over the time you've held it. So there's all this annoying tax accounting there. People don't want to use a volatile asset as a bridge currency for a transaction. Clearly, stablecoins are better for that. But all of that said, Bitcoin as this independent store of value asset that is in a form that can't be debased, that isn't exposed to governments, that is secure, that you can self-custody and hold, yourself directly. That thesis continues to be more relevant by the day.
Well, I have heard you say that you think that Bitcoin now needs to evolve beyond the ETF to stay relevant, that there
Yeah.
needs to be more innovation on that front. So
Yeah.
explain that.
I mean, at the end of the day, the ETF is an important ratification of Bitcoin, and it's a very important way enabling allocators to get efficient access to Bitcoin, spot Bitcoin directly.
Right.
That's great. However, Bitcoin does need to show some technological dynamism. And over the last few years, there's been this real regressive phenomenon in Bitcoin where people have been trying to ossify the system and are skeptical of anyone trying to build anything interesting with Bitcoin. Meanwhile, the crypto economy has blossomed. DeFi, decentralized finance, has taken off on other blockchains. People have begun using other blockchains for much more interesting use cases. And that hasn't happened on Bitcoin. And so, part of the reason the protocol is very limited, it's not very programmable. Now, what is changing is there are new layer 2 networks being built on Bitcoin that would allow individuals, programmers, to create systems known as rollups, which is the dominant scaling method for Ethereum, for instance. So these are just ways to create overlaying payment networks, transactional networks that settle debt back down to Bitcoin and that allow for more transactional flexibility, more scalability, more programmability. So basically building structures on top of Bitcoin that allow for a broader set of transactional use cases. And I think Bitcoiners have been very complacent, thinking that its success is just guaranteed. But it's not. Like, it's a competitive environment. Other blockchains have these structures, these other layer 2 networks. And I think it's time that Bitcoin reaches parity there. The good news is that we are seeing a blossoming of these use cases. Right now, I've never seen more startups building on Bitcoin than I've seen in my career. So right now is kind of the golden age for new startups on Bitcoin. So that is very encouraging for me. Yeah, I don't think we can rest on our laurels and just assume that we're going to win. We need to continue to push the envelope technologically.
So without the technological innovation, you think that Bitcoin sort of as an ultimate store of value status is threatened?
We need to show to potential investors, users, that there is technological dynamism still in the Bitcoin ecosystem.
Right.
It's probably fine in its current form, but that's not very ambitious. And I would like to use Bitcoin for more things than just holding it. I would love to, experience a decentralized finance ecosystem on Bitcoin the same way that exists on Ethereum or Solana. That doesn't exist today, and I think it's about time that we, consider these tools that are used on other blockchains and figure out how to apply them in Bitcoin.
Well, you could say that you have a Bitcoin equivalent of an NFT with ordinals, right? Is that the kind of innovation you're looking for? Is that enough? I mean, there were a lot of Bitcoin purists that are very against ordinals, but what are your thoughts there and what we can expect in a similar vein?
That's a start. Yeah. And actually, the emergence of ordinals, which only happened recently, sort of really in 2023, is one of the things that made me realize there is a cultural shift in the Bitcoin ecosystem whereby Bitcoiners are now willing to do more interesting things. Whether or not you like NFTs, putting arbitrary data on blockchains is very compelling for a lot of people. And I believe 2 of the 5 most high valued NFT collections are now on Bitcoin. And so Bitcoin has become actually a real relevant force in the NFT ordinals ecosystem. But that's just the start. I'd love to see Bitcoin reach full parity with Ethereum, sort of technologically speaking. But yeah, the ordinals thing was actually a key moment that made me realize, okay, maybe the Bitcoin community is actually open to these other use cases. It's worth a shot trying to build them here.
So when you talk about a Bitcoin ecosystem, at least in terms of a payment system, we have Lightning, but many are saying that that hasn't really taken off as successfully or as rapidly as we would have liked. What are your thoughts there?
Yeah, I mean, look, Bitcoin fought the civil war between about 2014 and 2017, 2018 about this exact topic. Should we have layered scaling with Lightning as the ordained solution, or should we just increase the block size and have one very big blockchain, try and keep transaction fees low? And the so-called small blockers won the war, right? So we decided to pursue layered scaling with Lightning as the solution. And we've been working on Lightning now for about 7 years. That's been the main thrust of Bitcoin core development. And unfortunately, Lightning appears to have fundamental constraints. And enough capital, time, and energy has been put into it that we can really evaluate the system now and determine whether it succeeded or not. As of today, there's only about $300 million worth of capital in Lightning. It's processing around $1 to $2 billion worth of transactions a year. That's very small relative to stablecoins. It's 10,000 times less. So Lightning hasn't succeeded as a mainline scaling solution for Bitcoin. It was the thrust of development for the last 6 or 7 years, but it hasn't succeeded in line with the expectations of the most of the Bitcoiners that were around back then, certainly including myself. So it's okay to acknowledge that it hasn't been as successful as other scaling solutions. That's fine. The question is, what do we do from here? Do we double down on Lightning for another 7 years? Or do we explore other scaling solutions? I'm certainly in the latter camp.
Right. And Nic, I assure you that about 90% of people know Bitcoin, have no idea what Lightning is, have no idea what ordinals are, have no idea what layer 2 protocols are, but they know Bitcoin, they see it's going up, and they want to buy it. You know, the retail knowledge of wanting to purchase Bitcoin is very far removed often from, the fundamentals of what Bitcoin is supposed to represent ideally in the first place, let alone all of these other technological developments that we're seeing or that we're not seeing, as you just discussed. And in terms of retail sentiment, right, you often call out people who like to make the comparison to the Tulip Mania. And you had an interesting post on X recently that I want to call up, where you said how the Tulip Mania misrepresentation of Bitcoin is something that people really need to hear about because it reveals that they're doubly ignorant about Bitcoin and history. So very quickly, give us your take there.
Yeah, I mean, look, comparing, let's say there was a real Tulip Mania, which there wasn't really, but let's say there was. That would have been just like one instance of, tulips rallying and then crashing. Okay, Bitcoin has gone from strength to strength over 15 years. There have been multiple sort of bubble type events during that time. You'd rally in 2011 up to $32 back down to single digits. You'd rally in 2014 up to about $1,000 back to double digits. You'd rally in 2017 up to $17,000 back to $3,000. And then you had a rally in 21, 22 up to $65,000 back down to $15,000. And now you have a rally again up to $70,000, right? So there's been no bubble in history where you've had, this bubble burst and then come back and burst and come, you just don't see that. So what this really looks like is an asset class that is being monetized over time in an unsteady way with rapid, appreciation events and then consolidation, things like that. But, it doesn't look like a conventional bubble of history. Now, with regards to the Tulip bubble, I really encourage people to actually read the history and see what happened there. It's really just one book, Popular Delusions, The Madness of Crowd, which I think is responsible for fomenting this myth, frankly. Mm-hmm. And it appears that, the negative view around Tulip trading was actually a consequence of Calvinist advocates who felt that consumerism was bad and finance was bad. And, they promoted it as a very negative thing. But The tulip market was actually pretty efficient. It was reacting to warfare events and supply shocks and demand shocks in the Netherlands and Germany. The charts that were portrayed around the tulip bubble are generally pretty misrepresented. They actually refer to option strike prices. This might be a little too technical, as opposed to spot prices. Ultimately, it wasn't like the whole Dutch economy collapsed because of tulips. Appeared to be trading was pretty confined to a handful of individuals, and it didn't really cause a lot of fallout. So, Bitcoin, has gone up and down over the last 15 years, but the general trend is up. So it doesn't look like any of these bubbles. And yeah, the tulip trend in the Netherlands, didn't really look like a true bubble if you're willing to look at the history. And it was actually a pretty efficient market. It wasn't just a mania. Like, the market was reacting to actual real events that are happening in the real world. So there's nothing wrong with the tulip market in the Netherlands in the 1600s.
All right. Well, I mean, I get your point on that, but obviously some major over appreciation of tulips there, as it turns out. But I get your point. Now, you mentioned reacting to events and how Bitcoin has reacted to certain appreciation events in its cycles, which, of course, by the way, is extended far, far, far longer than the whole tulip mania has anyway in the first place. I think that was only like about 5 years. Correct me if I'm wrong. But with Bitcoin, we had, a lot of positivity leading up to the spot Bitcoin ETF in terms of a positive narrative. We saw the price rally on that. Now, as we discussed earlier, the halving has been seen as a positive narrative in terms of driving up the price. We know what you think is going to happen after the halving. But what is the next bullish, positive narrative appreciation event that you can foresee happening after this?
Yeah, I mean, I actually don't take a particularly catalyst-driven view of Bitcoin. I think the general trend is monetary repression. As I said, the debt crisis, we're seeing the collapse of sovereign currencies, with the dollar being the last one to collapse. And so I think those are all, strong and ongoing trends. One thing that I am excited about is the emergence of these new layer 2 networks on Bitcoin, which is a key fundamental change. Which is going to really improve the usability of Bitcoin and will bring it in line to some of the great infrastructure that's been built on other blockchains. I could also see the Bitcoin NFT market powering more demand for Bitcoin. And around the time of the halving, we expect to see the creation of new asset issuance protocols on Bitcoin, which could also drive demand for Bitcoin. So there are a few things that I'm sort of looking forward to in the near term here.
And big picture, Nic, how confident are you that Bitcoin is an asset that's here to stay, at least for your lifetime?
I've dedicated my career to the asset class, to Bitcoin. I don't see that changing anytime soon. So, post ETF, I think there's no doubt remaining that Bitcoin is a mainline asset class. It's something valid that, is being folded into the financial system writ large. And isn't going anywhere. And I only see it going from strength to strength.
All right, we'll leave it on that positive note. Nic, thank you so much for joining us. Appreciate it. We'll have you back soon. Nic Carter.
Appreciate it. Thank you.
Thank you. And as always, thank you for watching. Make sure to subscribe if you're watching us on YouTube. For me, Michelle Makori, and the rest of the Kitco News team, we'll see you again soon.